Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently, what we think is going to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. And if you are looking for more from the crypto space, why not check out the Patreon services as well in the description below. We offer a lot more for our Patreon members via Discord, everything from AMAs twice weekly. We've got another one with our Patreon members this evening at 8 p.m. UK time, through to trading, portfolio and project reviews, through to a whole host of various other things. So why not check that out if that's of interest to you? Okay, let's make a start with this though, right? Bitcoin paired up with USDT on the hourly chart. Binance is the data source. Now, I've deleted everything off just to try to make this as clean as possible. And this is going to be kind of a brief update as to what we kind of did in the live stream for an hour and a half this morning. So I'll give you kind of the ins and the outs of that. But if you want more details, I'll link in below the actual stream that we did this morning so you can get a better idea as to kind of what is going on with more detail of the background data. But we'll keep this just to charts, and we're going to want to start mapping out what happened. So obviously last night, or yesterday I should say, we kind of saw this move down and we saw this move up. I did the whole video yesterday afternoon about this particular area. We're here, we wicked up, we took all that liquidity, and then we moved all the way back down again. And then, of course, loads of short positions, so the price moved up, right? This morning, we saw that there was a decent amount of short positions in the market. So we said the price is more than likely going to move against those. So the price starts to move up again. Okay, and we'll talk more about that in a moment. But basically, if the majority feel that the market's going to go down, the liquidity is higher up on the graph. That's where they're going to appear, or that's where the liquidity is. That's where the price is going to gravitate towards, right? Understand that the price usually goes against the majority. So we'll just keep that in mind. When I talk about the majority, I mean from leverage points of view. Okay. So let's go ahead and break this down, right? So this move down here, last time we were talking about maybe this was a 5-wave drop that was invalidated. And actually, when I zoomed out, I could see it a lot more clearer as to what is going on. I'll show you this. So it looks like this is 1, 2, this is 3, 4, and then 5. Okay, now inside that wave 3, we can also kind of bring this down a little bit more as well. We can quite easily say 1, 2, and then I think we were up at about here, 3, 4, and 5, like that. And you can start to see how that kind of mapped out quite well. We've got a couple of options with the wave 1, wave 2 scenario. We can be up here as well. And if we wanted another kind of 5-wave count inside here, we could also go 1, 2, 3, 4, and 5 inside there as well. So we can really kind of like bring it back down. It became quite clear once this was in here and we zoomed out and we could see what was going on from the structure. So I'll remove the sub counts and we'll leave it in like that so we kind of get an idea. Now, if that is a 5-wave count down, okay, and it's really hard to make this a 3-wave count with the amount of volatility that is in there. I mean, you can try your best to kind of say ignore this bit on this side and just go 1, 2, and 3. I mean, you can try to do that and you can kind of see 3 within there and so forth. So it's always possible that is what's going on, but it would mean that this area is very strange on this wave 1 area. So I'm going to leave it as 5 and we'll run with the premise that it is 5 waves for now, and we'll see what that looks like as time progresses. Now, with this move to the upside here, this is important because it doesn't look like much on our hourly chart. It just looks like we kind of went in a straight line. But if I come into the 15-minute, we can actually then start to articulate this as also a potential 5-wave structure inside here. And it looks like this, right? So it's kind of like really broken down. If we go to a 5-minute chart, you can kind of see how that kind of structured out a little bit. This kind of pattern right inside here as well, where we kind of narrow this in, right? And we can kind of see that kind of coming in as a bit of a triangular wedge, and then we broke out of it, right? So it's not too unusual when we break it down. However, when we start thinking about it on the hourly chart, it's actually, you know, pretty much like looking like a straight line. So if that is 5 waves up, then we should be expecting some kind of retracement and then an additional 5-wave structured move to the upside. Because it would be an ABC if this is 5 down going up, right? We go like something like this, right? Now, this dashed line across the top here at 20,475 has to hold. We can't go higher than that if we want this structure to be playing out, okay? And this structure would then lead us back down in another 5-wave move at a later date. Okay, so we end up with a 535 coming in. Now that's really badly drawn. Those numbers are not accurate. They're just kind of an idea of the direction or the moves that we're looking for. Now, with this move here, we've got a couple of things to think about. One, we're probably maybe not even necessarily finished with this move just yet. And this is an unpredictable B wave potentially, right? Which means it can be finished right now and it can move up, or it could continue to move down and then move up later, right? Very, very difficult to get our heads around exactly where that is going. With that being said, we can use our stochastic RSIs to help us understand where the momentum is. Right now on the right hand side, we've got my little cheeky crypto SRSI indicator, which is available for all Patreon members down in our Discord server. You can't find this via searching in the indicators. You have to have an invite for it. So in the Patreon is where you'll get this. Basically, this looks across all these different time frames, okay, and basically says whether we're overbought or oversold. So at the top here, the hourly chart, that's where we are right now. We can see that we're oversold. The 4 hour and the 8 hour is overbought. So that means that there's some kind of retracement that is going to be required. We're about to kind of, reverse. We've run out of momentum now to the upside where we're looking for reversals, okay? The daily is actually in a really good spot. We'll take a look at that in a second. The weekly obviously still needs corrections, and the monthly is in a really good spot as well. So for the most part, I'm expecting volatility, right? And that's kind of what the stochastic RSI is helping us understand here. Okay, so we're looking at momentum, potentially looking for upward moves on the hourly, but it doesn't have to be major. But I would say that I'm concerned about the 4 hour and the 8 hour. I think those are the ones that we should be, specifically with how fast these moved up, right? From down here to up here, oversold to overbought very, very fast, but not as fast as this. This is very, very rapid, okay? So knowing that we're right back up in this overbought area on our 8 hour chart, and essentially what we've done here is we aren't there yet, but potentially got divergence. And this divergence is going to be the fact that we are going in with these lower highs, yet our stochastic RSI could potentially be looking to come up higher, as in we're setting a divergence between our momentum and our price action. Okay, this is going to be an interesting one to keep an eye on, because this could mean that actually more downward price pressure is going to happen imminently, right? Now, the hourly chart, of course, this can stay oversold for quite a period of time. It doesn't have to move anywhere. Up here, for example, we were oversold and we still crashed all the way down, right? So we could be oversold here and still crash all the way down. This isn't an indication of like price movement. This is an indication of how strong a move is. So we can move this all the way back up here without doing any price movement whatsoever, then slowly grind it back down, or just remain in this oversold area, as in there's just so much selling pressure, that's where it is, right? But at some point this is going to reverse up and it's going to be bullish on us, right? Now, if we have completed 5 up, I'm looking for 3 down, 5 up before we break down. But again, this is a B wave move, and it is under the premise that this is correct, okay? It could be that actually this is just a B wave of this, and therefore we break down. And B waves are so unpredictable, it is possible that this is just A, this is B, and then we still break down towards our kind of 16K target as a C wave, and it's just so difficult to really get our heads around it. So we want to be very, very cautious with exactly where we are. What we can do, though, is get rid of the stochastic RSI. But first of all, just come over to the daily. The daily is actually in a good spot. I'm not too bothered about the daily. Where we are right now, we can still pull back more, right? We can see we're oversold here, for example, looking for upward momentum, and then we still drop down before moving back up. So it's not like it's going to tell us exactly where to buy and exactly where to sell. It's just one of those things that we have got momentum that will eventually shift upwards. We just don't know if it's going to happen soon or not. So let's go ahead and take a look at some different ways of approaching the charts, okay? So the first thing we want to do is we want to figure out where is our kind of major area of support going to come from. And it looks like it's going to be somewhere in here. Now I'm going to just kind of adjust this a fraction. I'm going to put it right in here, and I'm going to pull that across, and I'm probably, that looks like a pretty good spot right there. Okay, so this might be our supply zone. So demand zone, sorry. So here was demand, then we went through it and we turned it into supply and supply, or also known as resistance and support, right? So here was support, here was resistance. We broke through it, we tested it as support or as an area of demand. And if we're going to come back down, this is going to be the obvious area, I think, that we're going to be wanting to look at. This is basically 19,160 to 19,310 approximately, right? So we're talking about that kind of range. I think that's where the area that we want to be focusing in on. Now, if that was to break and we were to lose that area, the next major one that I think we'll probably be looking to address, yeah, it's going to be right in here. And it's probably going to be down to this point. Let me see where that goes. Yeah, it comes across here. Comes across quite well. I wonder if I can just map this down a fraction more. Might be a tad too much to kind of handle at that point. I do like the look of some of these wicks down here though, so I'm probably going to take this one here and I'm just going to run it across. This is an approximate area, it's not going to be spot on perfect, but if I bring that across here, we can kind of see this was an area of previous support. We broke it, we wicked back in, we grabbed all that liquidity, all that scam and stuff that was going on. We broke back through, but we haven't come back down. So if we were to lose this higher area, then this is the next area, I think, which will be 18,865 towards about 18,900 and let's say 70. Okay, so these are the areas that we'll want to be kind of keeping an eye on as to whether or not we lose them, we go down. If we bounce from them, then we can go up. Okay, so that's kind of where that looks like to me. But keeping a close eye on how that momentum shifts around is probably going to be key for us to understand whether or not we've got some kind of long-term problems or not. Okay, so I do think that we kind of have some volatility to be expected, and unfortunately, this is really bad for me to say, but I think we probably come down to one of these two ranges. I don't know which one, right? But one of these is going to hold. And then we're probably going to move back up again. Now, in an ideal world, we want to ideally test the lower end because that gives us more headroom up here because we don't want to cross 20,475. So by coming down to this lower range, somewhere in that kind of high 18,800 level, that there's going to be a potential area. Then we can move up and we can really take advantage of a nice big ABC structure before breaking back down. Okay, that would probably be the ideal situation. So I'm going to leave it there, guys. If you found this useful and informative, hit the like button. Do join us down in Discord. We can discuss things further there. Other than that, have a fantastic day, guys, and we'll catch you all in the next one.